Well, thank you very much indeed, Valerie, for that excellent overview of the key markets aspect of MiFID. This whole market structure question clearly has a number of important elements to it. There's transparency, there are the data publication and consolidation requirements, powers for regulators to gather and use information, there's the post-trade issues around access and so on. But I really want to focus my remarks on the trading venue categorization proposals. I think when you boil down the markets aspect of MiFID, it's the trading venue categorization elements that are really at the heart of it and which really embody the legislative and regulatory philosophy in relation to markets. I think in my view the existing MiFID I was a success from a trading environment perspective. Competition has increased, trading costs, at least direct trading costs, have fallen, and there's no need for a radical rethink. But there are some changes that are clearly necessary to ensure that market integrity and stability are preserved and that transparency is increased without damaging liquidity. And therefore we support the broad thrust of the proposals that the Commission has put forward and which Valerie has outlined. And I've summarised on the left-hand side of my slide, very, very simply, what the new trading landscape will look like. And I think the overall message is that in the new world, there will be rather less over-the-counter trading and rather more trading on structured venues. I'm not sure whether this diagram has been drawn to scale. That's one of the interesting questions perhaps for discussion, the relative sizes of each of these different boxes. One of the things that the Commission are proposing are that the organisational requirements for regulated markets and MTFs will be more closely aligned than they have been in the original MiFID. That seems like a good idea. In the UK, we have already taken the step of supervising the larger MTFs to similar standards to regulated markets. And as Valerie mentioned, there's also a proposal to have a small and medium-sized enterprise category, really hanging off the MTF definition. It seemed to me one of the things that was perhaps missing from the existing MiFID around MTFs were some provisions for the primary market aspects. MTFs very much were seen as secondary market trading venues, but if we want to see them develop as small and medium-sized enterprise markets, we need to flesh out the primary market regulation. For systematic internalisers, the Commission are proposing to really flesh out the non-equity obligations in that space, particularly with some new quoting obligations. And then, of course, most importantly of all, there's the creation of this new OTF category, where there seem to be three motivations for its introduction. The first is to try and level the playing field for the trading of equities between broker crossing systems and MTFs and regulated markets. The second motivation is to provide a basis for implementing the G20 commitment around the trading of standardised OTC derivatives. And the third basis is to provide a framework for the introduction of more pre- and post-trade transparency. And I think an interesting debate is just how those three different objectives, those three different motivations can be reconciled. So this is the framework for the trading venue landscape in the new MiFID. There's still, however, an awful lot of detail left to fill in at level 2 and in binding technical standards. And I just really want to raise 5 issues which are going to be key in those further discussions. There are probably more than 5, perhaps as many as 52, as Diego was mentioning, but I'm a regulator and I like to count on the fingers of one hand, so 5 is about my limit. The first issue is the treatment of equities versus non-equities. If you're thinking about the appropriate market structure for the future trading landscape, do we need to have a different concept for equity markets compared with non-equity markets? That reflects the fact, or could reflect the fact, that they are very different instruments, very different characteristics, very different trading patterns. And that will have implications for the definition of some of these trading venues. It'll have huge implications for the nature of any transparency requirements that are introduced, and so on. The second question is just how do we define this OTF category? If we're going to have an OTF category, it seems to me to be important that it's sufficiently distinct from the other categories. And one obvious question is, how is it going to be distinct from an MTF? Well, in the Commission's concept, there are two key areas in which OTFs are different from MTFs. The first is that OTF operators have discretion in how orders get dealt with, and OTFs can be restricted to clients only. But there are other questions around the definition. So, for example, what type of trading methodology will be capable of being encompassed within an OTF? Would it be capable of encompassing voice broking and hybrid models, for example? What about single dealer platforms? Still quite a number of questions to explore around the definition of OTF. The third issue, which I think kind of runs through many of these questions, is how is the future trading venue landscape going to treat proprietary capital, the use of balance sheets to support trading? I think we need to have a bigger debate here. It seems to me that there are many instruments which are not sufficiently liquid for trading venues simply to be supported on the basis of continuous interaction between buyers and sellers. We need to think through how we can accommodate the use of proprietary capital, the use of a firm's balance sheet to support liquidity. One obvious point here is the Commission's proposal that OTF operators will not be allowed to put prop flow into OTFs. The fourth issue is how do we manage technological change? It seems to me that from a regulatory point of view, it's really quite difficult to turn the clock back and try and hope we can move to a world where new technology didn't exist. And therefore we have to have appropriate ways of addressing the challenges. Absolutely seems to me that we have to have stronger systems and controls to deal with the challenges arising out of automated trading. The Commission are definitely moving in that direction. ESMA has already introduced some guidelines in the context of the existing MiFID to flesh out the systems and controls in that space. Second thing, we definitely need a greater regulatory powers, and obviously regulators need to make sure that their own surveillance mechanisms keep up with marketplace technology. And clearly here it's important to bring within the regulatory sphere those firms that have direct access to trading venues. The third issue, though, around technology is what's been the impact on efficiency and market resilience. And here I think it's really important that we take time to have a look at the evidence. Still, for me, these are open questions where more evidence needs to be brought to bear, which would then inform what the appropriate regulatory response is going to be. And then the final issue arising out of the definition of the trading venue landscape is not to forget that in the legislative approach that we have in Europe, the definition of different types of trading venue drive the boundary for the scope of other sorts of legislation. So, for example, the transaction reporting requirements, or the market abuse definition, or define the instruments for where issuers have obligations for disclosure. And so if we create a new OTF category and have a new category of instruments admitted to an OTF, it's important to work through what the consequences would be of using that definition to drive a change in the regulatory boundary for transaction reporting and market abuse and so on. It may be that actually it may not make sense to completely align those definitions. So, for example, to give you one example, in the proposed revision to the Market Abuse Directive, there's a proposal in the proposed revision to MiFID, there's a proposal that transaction reports would be required for instruments which are related to instruments admitted to an OTF. That could be a very, very wide range of instruments, and we want to make sure that transaction reports really are going to be helpful for that range of instruments. So let me stop there. That's a very simple picture of what the trading landscape is going to look like. It's an excellent framework for moving forward, but there's some really tricky issues in the detail that we'll need to work through.